Hello, I'm MaryAnn. Of 460 S&P 500 companies reporting earnings so far, 75% have topped analysts' income forecasts. Sounds great on the surface. But what about Canada? How are our earnings this season? Let's dig into the numbers with Cynthia Caskey, Sales Manager, Vice President, and Portfolio Manager for TD Waterhouse Private Investment Advice. Good to have you back. What did you think of earnings season in Canada?
We're still unfolding in Canada. We're a little bit
behind,
a little bit later in terms of the time frame for when we hear from Canadian companies. But so far, it's actually been the best quarter for a long time for Canadian companies. And I think what investors are asking, MaryAnn, is whether or not this is going to continue for the next quarter. And so everyone's really keyed in on the management's guidance going forward.
And we've seen great stock market performance for the last little while. What are the trends you saw?
We're seeing a lot of money moving in from the sidelines, particularly the retail investor or the individual investor in the United States, both there and in Canada, coming off the sidelines, really concerned about low interest rates and the idea that they're going to be moving higher over time. They're also losing against inflation, so they're worried about their purchasing power, and so we're seeing a very large movement into equities.
So let's look at specific sectors. What do you like right now? Where are you finding those opportunities?
Well, MaryAnn, you and I were talking a little bit before this segment off camera just about how much some of those valuations have moved up this year because, in fact, it's been valuations expanding. So I'm looking for ideas that haven't participated to the same extent and still offer value. I like the idea of also thinking about yield and dividend yield where you're getting paid to wait. So some of these ideas that I have about a 4% dividend yield that I'm thinking about as being attractive here. The first one I'll talk about is Husky Energy. We've seen energy prices start to roll over, and there's a question about whether or not earnings are going to be as robust going forward for the energy companies. Husky Energy is an integrated company, and so will definitely benefit from their refining margins, we think, as they go forward here. Has almost a 4% dividend yield, and we think that there is a little bit of capital appreciation coming toward investors potentially in the next year. They have a number of projects that could come on in 2014 that we're projecting for the next year. In terms of a second idea, certainly telecom has been bouncing around a bit out of favor, but TELUS is our favorite pick there. Again, about a 4% dividend yield. And with potential competition heating up, or whether or not there will or won't be a U.S. entrant, I'm paying a lot of attention to customer loyalty and the trends around customer complaints. And TELUS has their customer complaint level running at about 1/3 of their competitors. So I think even if new competition is coming in, we're seeing lower churn and better results for investors as a result of that. So TELUS would be my pick there. Can I offer another opportunity? With being a lot of concern around money flowing out of the commodities. Commodities have been very much under pressure. We've seen a lot of money move into the financials. I really like the insurance positioning and also the asset management side of things as we go forward over the next year. I think that, in fact, higher interest rates could act as a bit of a tailwind. Power Financial is one of those names where we really like the underlying businesses of Great-West Life and IGM Financial.
So even though there's a lot of competition in that space, you still like those areas?
Yes, and especially with the backdrop of rising interest rates, I think that's one area that investors could have an opportunity to reevaluate their portfolio.
Commodities have come down quite a bit in the last little while. What do you see going forward?
Unfortunately, my rule of thumb is looking to see where the commodities are versus the price of a year ago. It's a very simple rule of thumb for an area that can often be very volatile. Unfortunately, a lot of those stocks have been underperformers this year and have actually gone down year over year. As a result, we're seeing a lot of other pressure with tax loss selling season. So unfortunately, I don't think we're quite ready to step in an aggressive way around any of those names. Some of my signposts will be looking for China and seeing some of their industrial growth numbers turning around. But obviously at this point in time, anybody who's a user of those commodities, meaning any of those companies that are industrials or manufacturers, are actually benefiting from low energy prices and other materials. One way to possibly play the commodities, almost like the idea of a picks and shovels approach, not as subject to the commodity price, would actually be egg growth. It is a smaller cap name, but what they do is the green handling is their expertise. And with record grain crops, they're actually having a tremendous demand for their expertise. And it's a very simple business, but one that we think is going to be in demand over the next year. They just came out with great earnings. Stock had been out of favor, but investors are starting to recognize that in fact they're going to benefit not just the rails in terms of grain shipments, but also egg growth.
Oh, interesting. And where are they located?
And they're a Canadian company as well, AFN.
Oh, interesting. Well, let's talk about, there's been a lot of volatility in the markets over the last, well, at least several months, if not years. Where do you see that going?
Volatility, there hasn't been anything consistent about volatility. It's either been very high or very low over the last year.
It keeps changing.
It does. And we're sort of at a low ebb right now, but you never quite know when that's going to be picking up and what news is going to grab the market's attention next. As a result, MaryAnn, for those traders out there and even those longer term investors that have some gains in place, to think about stop losses. And the idea being that you decide what gains you want to protect. It doesn't have to be the whole position, it could be part of the position, but the idea is that you would be automatically sold out of the position if the stock were to drop below that certain point. And that's a nice way that if a volatility suddenly picks up, you're actually able to lock in some gains on those positions.
So it gives you a little bit of a gap then in case, just in case, you might say.
Yes, exactly. Because we are seeing money mobilizing off the sidelines here. You don't necessarily want to sell all your winners into strength here. That's always a nice idea, but sometimes you decide to sell a little bit too early and there could be still some money coming in toward year end. So it's a nice combination to protect those gains. I would reevaluate that every few weeks, MaryAnn, to see where the stock has moved and to continue to nudge up that stop loss level if the stock continues to move ahead.
All right, and it's also National Financial Planning Week from November 17th to the 23rd. So it's a good time to remind investors that a financial plan is more than just stock picking. Would you agree?
Absolutely. Investments are a key part of that, but we also talk about a wealth plan, and it's so much more than that, MaryAnn. In a low interest rate environment, with tax rates as high as they are in Canada, it's about keeping more and having a look to make sure you're as tax efficient as possible. There's also the whole idea of the next generation and leaving money to your loved ones or charitable causes, deciding what it is that you want your legacy to be. There's also a whole new component around social impact and what is that legacy that we're going to have during our lifetime. There's a whole component around asset protection, income protection, preparing for the unexpected. Right? Then, of course, number one on everybody's list is retirement. No matter what age of Canadian you talk to or we talk to, we find retirement being their number one goal. Just finding out, where are you? Are you on track or are you off track in terms of your goals? And how do you get back on track to what you want to achieve with your financial life?
Thank you, Cynthia.
Thank you, MaryAnn.
Well, now's a good week to look at your financial plan, or if you'd like, speak to a professional financial planner or advisor. Thanks for watching. I've been joined today by Cynthia Caskey, Sales Manager, Vice President, and Portfolio Manager for TD Waterhouse Private Investment Advice. Before you decide to invest, make sure you do your homework and ensure that the investment is aligned to who you are as an investor, including your asset allocation and your tolerance for risk.